welcome to Factful Finance. I'm so glad you're here today because we're about to talk about something that could change the game for your financial future. How to start investing in high school. Now, before you think, I'm too young for this, let me hit you with a powerful fact. If you start investing early, your money has more time to grow. And that's a huge advantage. Studies show that investing at 16, even if it's just a small amount, can result in hundreds of thousands of dollars by the time you retire. Sounds crazy, right? But it's true. The earlier you start, the more powerful compound interest becomes. So how do you actually get started with investing as a teenager? Well, let's break it down into simple steps. First, let's talk about the basics. To start investing, you need a brokerage account. Most high schoolers don't have one yet, so you'll need to set one up. There are several online platforms like Robinhood, E-Trade, or TD Ameritrade that allow you to open accounts with no minimum deposit. Some apps even let you start with as little as $1, which means you don't need thousands of dollars to get in the game. You just need the desire to get started and a little bit of patience. Now, a key thing to know about investing is the concept of diversification. This is a fancy word for not putting all your eggs in one basket. You don't want to invest all your money in one stock, because if that stock goes down, so does your money. Instead, diversify your investments by picking a mix of stocks, bonds, and exchange-traded funds, ETFs. ETFs are a great option because they let you invest in a wide range of stocks all at once, like buying a small piece of an entire market. This helps reduce risk while still allowing your money to grow. Let's talk about a real example here. Take Emma, a high school sophomore who's already thinking about her financial future. Emma starts by investing $500 in an ETF that tracks the S&P 500, which includes the top 500 companies in the US over time. She sees her $500 grow to $1,200. This is the power of compounding over several years. Emma's decision to start early will give her a serious edge in building wealth by the time she's in her 30s. Of course, investing isn't a one-size-fits-all situation. Some teenagers might be more into tech stocks, while others might prefer safer, more stable bonds. It's important to think about your own risk tolerance and goals. For example, Noah, another high schooler, might prefer investing in a bond, which is like lending your money to the government or a company in exchange for interest. Bonds are generally less risky than stocks, but they also offer lower returns. For a young investor, taking on a little more risk with stocks or ETFs could be worth it, especially if you're planning for long-term growth. The next step is setting up your financial goals. Are you investing for something in the near future, like buying a car, or is this about long-term wealth? If it's long-term, consider contributing a small amount regularly, say $50 or $100 per month, into a diversified portfolio. The best part is, you don't need to be perfect or know everything right away. Just get started and adjust as you go. But here's the thing, before diving into investments, it's crucial to have a solid emergency fund. Think of this as a financial safety net. Life happens, and you want to have money set aside in case of unexpected expenses. This is the first step before thinking about investing. To sum up, getting started with investing in high school isn't as hard as it sounds. Start with a brokerage account. Diversify your investments. Set realistic goals. And don't forget to build that emergency fund first. Even small steps now will lead to big rewards down the road. Just a quick reminder, the information shared here is for educational purposes only, and listing apps or products doesn't imply an endorsement. Always consult a financial professional for advice tailored to your situation. So, what's the first step you'll take towards investing as a teenager? Let us know in the comments. We'd love to hear from you. If you liked today's video and found it helpful, why not click that subscribe button and ring the bell so you don't miss out on more tips to help you reach your financial goals. We think you'll find the next video we have lined up really interesting. Thanks for tuning in to Factful Finance.